Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good morning, ladies and gentlemen. Are we on? Can you guys hear me? Oh, there we are. Sorry, we had a few problems with the links this morning. And as I start, the dog started barking outside for the people collecting the trash. So we're very grateful for the trash being collected. I hope you're all looking forward to our session today. It's about reporting engagements, accounting officers' reports and compilations. For those of you who have attended it before, not much has changed to our approach. I brought in a few things around ethics because of the times we live in. And then, yeah, every time we go through, and even myself, every time I go through these sessions, I learn a few things. So, yes, I hope you can find something from today's session. It's a compact session, although it's 4 hours. I have to push to get through everything. We considered doing it in a 2-hour session, but it's too much information for 2 hours. So yes, ladies and gentlemen, welcome this morning to our SAAA webinar. I hope you enjoy the time with us. And what I'm going to do, if we see we're battling a bit with the internet lines, I might just switch off the video. As you can see, I've got a face for radio, so yes, I hope you can bear with my voice and enjoy the morning with us. So let's get started. My name is Jako Liebenberg. I'm a chartered accountant and registered auditor. Do you have my email address? I often get queries and I try to answer them. The emails are a bit busy sometimes, so I miss it. If I miss it, I sincerely apologize. You can always just later send the email again. And then we can see if we can assist you where possible. So I just want to get my slides up here. All right, so our goal for today is to understand some of the common law, contractual law, and statutory law when we are performing an engagement. Ladies and gentlemen, we need to look at the background to things, to ask ourselves why we are doing things. And like I say, every time I go through my preparations for these webinars, I pick up things that I miss. And then I go back to my staff and I say, guys, we need to look at this and this and this. We're going to look at three main types of engagement today: your compilation engagement, your agreed upon procedures, and then your non-compilation agreements. So for each of these engagements, and I find often that we go to a copy and paste with our engagement letters, and I'm as guilty as everybody else. But we're going to look at example engagement letter also. It's a good example for the CCs because there's still a lot of CCs going around, and there's not much coming out of CIPC and all the professional bodies around this on an engagement as an accounting officer. So we'll look at that, and I think when you look at the engagement letter, you'll see it's a very nice engagement letter. It's very detailed. I've used some of that in my engagements as well. So yes, let's get into it. All right, so ladies and gentlemen, we are professionals in the accounting profession, and why do we need quality financial statements? Firstly, we've got a legal obligation as registered professionals in terms of our scope of engagement and who does what. And that's determined by our professional guidelines and also by the statements, the requirement of the statements. There's duties and liabilities for everybody, and then we're going to have a look at some of the court cases, and then we're going to look at the Tax Administration Act and our responsibilities there. Because in practice, we try and be a one-stop shop for our clients, and the challenge with that is that we don't look at our duties and liabilities. And in Afrikaans, we've learned the saying, bly in jou baan, stay in your lane. that's exactly my message to you today, is when you agree on the scope of an engagement with a client, stay within that scope. Don't go out of the scope, because with these comebacks, people always look for somebody to blame, and that's normally us. So use today as a knowledge gaining exercise, but also as part of your risk management. That's basically how I see it. Right, so we can have a look at some pieces of accountants in the Consumer Protection Act. We're looking at the Companies Act in terms of our liabilities, our responsibilities in terms of the Corporation Act, then my view on reducing liability. And I don't want to scare you guys. I don't want a bunch of resignations from the professional body after my webinar. And then we look at the different kinds of engagements. And I touch on IFRS for SMME. I'm not going to go into too much detail, we won't have time. And then we're just going to quickly speak about the other statutes where accountants are involved. But like I said, I'm not going to dwell on it too long today. All right, ladies and gentlemen. Okay. I'm going to get to the quality control policy later in our session, because what happens is if I start dwelling on the policy in too much detail in terms of the policy, it takes up our time that we don't get to the statement. So there is a slide later where we just look at the outline of a quality control policy. Now, ladies and gentlemen, as I said so many times before, the ISQC1 policy is a requirement in our profession, but it's not rocket science. It's a simple process that you need to follow. It looks at your staffing, it looks at your responsibilities as partner or director or owner of the business, and you take it from there. So don't be scared. I think often our lack of knowledge or our lack of experience results in the fact that, or results that we are scared to look at things and rather put our heads in the ground like ostriches and hope the problem goes away. So the secret to success is to be ready for your opportunity when it comes. There's a lot of opportunities in our profession at this stage. I think we need to become more multidisciplinary. If you look at the evolution of the profession in the last 20 years, where we started, or I started as a trainee, where we captured transactions, and I don't even have a calculator anymore, to today where you take these programs and you just draw in the transactions. So our whole scope has changed. And then remember also, it's nice to have these fancy programs, but we need to stick to the requirements of what is expected of us. And that is one of the challenges. So let's look at our framework. All right, why do we need quality financial statements? Firstly, ladies and gentlemen, there are different requirements. Firstly, you've got a risk. People want to know what their risks are. People want to plan. And then we've got Users, Companies Act, Tax Administration Act, and then public opinion. So I'll go into some details. And we often need to consider who are the users of our financial statements. Owners and shareholders are the users, directors, managers, and then also in terms of our legislative structure in South Africa, employees can be a user of those financial statements. When we get into labor disputes, in the times we're living after COVID and all the retrenchments and things our clients go through, and some of our businesses have gone through it, the employees can also ask for the financial statement. So yes, our finance providers, analysts, regulators, and obviously SARS use the financial statements. So that's why there's a need for quality financial statements. Not only about the financial statements, it's about the profession as well. Okay, so what does the Companies Act say? The Companies Act in terms of Section 28 says you must have accounting records. Section 29 says you may have financial statements if that is a reasonable picture of your accounting records, and that Section 29 refers to interim accounting statements. And then Section 30 looks at annual financial statements, which is a requirement, and then the Section 214 offense.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.